Good morning, everyone. You are watching live daily market outlook for Thursday, 28th of June, 2012, prepared by Windsor Brokers. Not much to say for the past 24 hours market movements, as most of the markets are basically in a sit and wait mode ahead of start of today's key event, today's Eurozone summit that might give us some more clues about future of the Eurozone. However, still a lot of dissonant tones come from the Eurozone officials, as Angela Merkel as the top person in all these recent negotiations, and the head of the biggest economy in the Europe, as well as the paymaster for whole Eurozone, still disagrees with the number of points that are due to be discussed today. The main point actually comes the idea from backed by France, expecting a Eurozone countries' debt to be shared by all members, but strong opposition comes from Germany, as they first wanted to see their long time ago proposed idea of having a more united Eurozone with more fiscal control, and especially in the banking system. Of course, that will be causing the high price for all members of the Eurozone. As said, they will be losing a part of their sovereignty. But in any case, as we mentioned basically in previous sessions, this is the only way for now to handle it. As from the forming of Eurozone, the most important point, which is a more unified banking and fiscal as well as economical system, failed to be implemented at the beginning, and basically now we have the results of most of the countries doing a number of things on their own, and coming in the situation that Greece fell first, then Spain, and now the focus is on Italy as well as Cyprus, that requested the bailout from the Eurozone, that has been accepted by their Eurozone partners, with the IMF being involved, and a group of negotiators well known as the Troika is in Cyprus now negotiating with the Cypriot government about details of the loan. The basic idea and the figures that came out from the officials, despite the Cypriot government still not disclosing the exact amount they asked for, moves around 10 billion euros that is required to be the first aid for their banks that were heavily indebted due to the losses and high exposure in the Greece. This was basically expected for the past few months, and it was just a matter of time. The Cypriot government tried the negotiations with Russians. That is still underway, with the first round of negotiations obviously failing. After this, the government turned towards the Eurozone. Basically, they are not happy with the very strict and tough measures required by Eurozone in order to get the money, the bailout, but seems that they have no choice at this point, and they have to stick to the Eurozone. More details we'll have most likely today or tomorrow, when the most of the details will be finalized, and likely the bailout will be accepted and confirmed. Just to mention, the Cyprus as a member of the Eurozone presents only 0.2% of whole Eurozone economy, but the more significant point is that requested the amount of 10 billion euros marks over 50% of the Cypriot GDP. That is approximately 17.3 billion euros, and this is quite a dangerous situation for this Mediterranean country, as the main production is basically financial services and some tourism, with the current situation in Greece that dragged the number of Cypriot top banks into the red territory, seen as a big threat to this Mediterranean country. Back to the Eurozone summit, which is due to start at 1300 GMT today. The starring person of the summit, Angela Merkel, brushed aside demands from Italy and Spain for a rapid action to lower their soaring borrowing costs and poured cold water on proposals backed by France that Eurozone countries should assume a joint liability for each other debts. Many international investors have deserted the Spanish and Italian debt, pushing bond yields to levels that Madrid at least cannot afford for long, as it simultaneously tries to save its banks hit by a property market collapse and cut its spiraling budget deficit. Merkel accused top EU officials of getting their priorities wrong by proposing common Eurozone debt before EU controls are in place on national budgets and economic policies. This is basically what we spoke at the beginning of the session. Germany is basically looking first to establish more control over all countries and then to move a step forward and try to implement steps that will be likely preventing Eurozone of falling further into the crisis. There are a lot of skepticism ahead of today's meeting, with most of investors seeing not any significant result as outcome of this today's meeting, but time will show. Still, the strong disagreement exists between Germany and their partners in the Eurozone, the biggest economies. I would share this opinion and said that we have to be very cautious with the expectations of any more significant result. Of course, we hope that some good and workable solution will be found and prevent Eurozone and the further domino effect of the crisis that started spreading from Greece will be prevented. For today also we have quite a busy calendar. Apart from the releases from Australia and New Zealand, as well as UK's nationwide HPI for June that came in negative minus 0.6 compared to minus 0.5% forecast. Still to come from Germany, unemployment rate and unemployment change. No changes seen on the unemployment rate that is forecasted to stay unchanged at 6.7. The release is at 7:55 GMT. From Eurozone retail PMI is due at 8:10. We have no forecast. And from UK at 8:30. Current account balance for first quarter of 2012. Further widening of the gap is forecasted to minus 8.9 billion pounds compared to gap of 8.5 billion pounds in the fourth quarter of 2012. Final GDP for first quarter from UK is also forecasted to stay unchanged at minus 0.3%. Unemployment claims from US due at 12:30 weekly release, 385,000 days forecast, slightly below the previous week release at 387,000. US GDP is also expected to stay unchanged. The quarterly release forecasted at 1.9% compared to the fourth quarter of 2012 release. As well as final GDP price index forecasted at 1.7%. A few speakers from Fed and the Bank of England are due at 15:30 GMT and 1700 GMT respectively. Sandra Pianalto from Fed and the MPC member will are due to have their speeches, and some releases that will be basically on the next day, but due to GMT time they are shown on our calendar. New Zealand building consents for May, and the number of data from Japan, manufacturing PMI, household spending, and the Tokyo core CPI, as well as unemployment rate. We will discuss this on the tomorrow's session when we will have the results and the releases of these instruments, of these indicators, pardon. And finally, a quick look at the markets, see the latest movements. As said, most of the instruments are in the sideways mode, in the sit and wait position ahead of the EU summit, with Eurozone, with the euro against the dollar moving within 124.40 and 125.30 range, neutral outlook in the near-term hourly studies with the 125.30 level for now limiting the upside. 4-hour chart test holds a bit more negative tone for now, with the immediate barrier at 125.30 and the 125.40, 55 days descending moving average, and basically break above and possible today's close above 125.30, 40 would be a good signal for possible basing at this very strong support at 124.40. These are the lows of mid-June and the past 2 days, as well as close to 61.8% retracement of the move from 122.87 to 127.45, where temporary base was found, and holding above this level will still keep some hopes of further extension higher. Of course, much of this depends now on the fundamentals and today's and tomorrow's outcome of the Eurozone summit that will give fresh direction of the pair. Daily outlook is still in the negative territory after a stronger reversal of 127.45, where the double top was formed, with the focus still aligned towards the downside after the pair broke below the ascending bull trend line of 122.87, still keeping the downside favored as immediate barrier at 125.40, where is the 20 days moving average on the daily chart so far limits the upside. Set range limits at 124.40 and 125.30 are now our main barriers, and basically out of this near-term directionless mode will break off either side will give us the fresh near-term direction for the pair. Also similar situation with the cable that is entrenched within 155.38 and 156.50 range in past 2 days, after a slide of 157.76 found support at 155.40 zone, just ahead of 50% retracement of the broader 152.67 to 157.76. The upside action remains capped for now by previous high at 156.50, as well as descending trend line, bear trend line of the year's peak at 163.00, connecting it with 161.81 10th of May. High that is currently standing at 156.37, and as long as holding below this barrier 156.37, 156.50, I would say the risk is still seen more towards the downside. 4-hour chart studies are slightly improved, slight regain of momentum, still not enough to push the price action through the initial barrier at 156.40.50 that is required to refocus upper levels at 157 and 157.45. Failure to clear 156.50 keeps immediate risk at the downside at near-term base at 155.30 zone, break of which and the 50% retracement at 155.21 opens round figure support at 155.00, and the more significant support zone at 155.60, where is the 61.8% retracement and the consolidative range floor of mid-June. A break below this level will be definitely bearish, and they will confirm a lower top at 157.76 and turn focus towards downside supports 154.00, 153.20, where is also the long-term trend line support trend line from 2009 high low, pardon, at 135, connecting 2010 low at 142.30 and currently standing at 153.20. As the dollar-yen's upside action and failure to hold gains after penetrating briefly the daily Ichimoku cloud and the subsequent sharp reversal down to 279.22 keeps the larger picture still in a rather negative tone as the near-term action was capped by 79.84, descending 55 days moving average. Hourly chart shows the so far directionless movement in past 2 days, with the downside being limited at 79.22 and the upper barrier of the range standing at 79.86. 4-hour chart is still holding a rather negative tone as the pair is still not clearly breaking the ascending bull trend line of 77.65 low. That will be the break of which will be signal for further extension lower as the upside action was capped recently at 80.61. The strong rally from 77.65 that cleared 79.80 and 80.00 was capped at our target at 80.60, limited by 90 days moving average. Currently, the more focus seen towards the downside, where the strong supports are at 79.22, 79.00, and more significant 200 days moving average at 78.85, break of which will be again bearish. Look for 78.60 and possible extension down to 77.65. Immediate outlook has set a neutral tone on the hourly charts. On the hourly chart, sees more focus towards the downside as the near-term price action still holds below the 20 and 55 days moving averages, keeping the pressure towards 79.22, below which to see 79.00 on the upside, 79.86, the first barrier of the 79.80, 80.00 resistance zone is seen limiting the upside for now, with a break here and a more significant 80.00 to bring some more positive tone into the near-term price action and possibly refocus 80.60, the peak of the recent recovery. Basically break below the trend line at 79.40 will be a clear break below trend line, and the recent lows at 79.32.22 is required to confirm the near-term bearish mode, and the open way is set towards 79.00, 78.80 and 78.60. The dollar Swiss near-term price action is still holding the positive tone of recent rally from 94.23 low of 20th of June, but a failure to clear a strong barrier at 96.50.75 zone sees the pair currently in the still consolidative mode. Descending studies on the hourly chart are slightly descending and pointing lower. Immediate risk is seen for a break below the range floor at 95.83 as 96 level is still under pressure. The price is currently moving around 96. That is our initial support, with the clear break here, and I would say more significant 95.73, where it's currently ascending a 55 days moving average, to turn the focus completely lower and look for further extension towards next support 95.40 and then 95.00. Ability to hold above 96.00 will still keep upside in play, with the break above 96.51 and 96.75 barriers to signal an extension of the near-term rally of 94.20 support zone, to confirm this double bottom pattern on the 4-hour chart, and the refocus levels at the upside 97.00 as a round figure resistance, and the 97.69 1st of June 2012 peak. Daily studies are still rather neutral at this point, as a reversal of 97.69 found so far support at 94.20, but upside action remains limited at 96.50 zone, with the failure to break here, risking a fresh leg lower and test of the trend line support, currently standing at 94.96 that will be signal of further extension with the break below 94.20 lows of 18th and 20th of June to confirm the further retracement of the short-term rally from 90.41 that peaked at 97.69. Again, most of the instruments, including dollar Swiss, are in the quiet mode today ahead of EU summit, and more action I think will be seen in our afternoon update, where some hints most likely will be given at the beginning of the Eurozone summit. A quick look at the commodities to see the latest movements. Crude oil is also still steady, holding steady off its recent low at 77.45, but not much has been seen so far of the recovery of 77.54 as the price action remains limited below 81, whereas the 38.2% retracement of the latest down leg from 87 to 77.54, as well as 55 days exponential moving average that is capping the upside for now. Keeping basically the strong support and previous strong support and double bottom at 81. 10-20 zone intact for now. If we see the crack of this support and further break higher, that might be a signal for some stronger recovery. Some positive outcome from the US indicators are giving more support to the crude oil, but generally weak outlook for most of the world economies is still seeing a huge risk of lower demand for the energies that keeps the oil price in the medium term under strong pressure, as it declined significantly from the beginning of the year, basically from end of February, from 110.53, the yearly high, dipping so far to 77.54, and from the technical point of view also break below the main bull trend line of 67.15 2010 low would be signal of further weakness and a possible test of our downside targets at 75.70 and the 74.94 low of 2011. The gold's price action, as shown on the daily Ichimoku Studies chart, shows the still negative tone as the cloud base keeps the upside so far well protected. Several attempts to penetrate the cloud have failed, and turning the immediate focus more towards the downside. Look at the daily chart. Studies are still in negative mode as descending 55 days moving average keeps the upside so far limited, with the two failed attempts at 1540 and 1533 being limited by 90 days, descending 90 days moving average, keeping the downside still vulnerable, and the possibility of test of the critical support zone 1520, 1530 and 1500 still heavily in play. The near-term price action of 1558 last Friday's low so far been limited by 1588 by descending 55 days moving average shown on the 4-hour chart, and then not much seen of this recovery as long as 1600 barrier stays intact. So far holding below 1588 keeps the focus on downside at 1562 and 1558, a break of which will risk a further extension lower, and a possible test of our key supports at the downside 1532, 1533, 1526, and this will be a signal of testing the critical very strong support at 1520-30 zone, loss of which would be quite risky for will be risky for a further extension and further corrective action of 1920, last year's peak and the historical high of yellow metal. So far the ascending 100 days moving average on the weekly chart holds the downside protected, currently standing at approximately 1540, and break of which would turn immediate risk towards 1526, 1522 and 1532 lows from 2011 September, December and the 2012 May lows, and basically break of this level would be quite risky. On the upside, lift above initial barriers 16.00 and 16.30.40s to provide a near-term relief, but nothing significant to be expected unless we see break above 1700 and more significant 1790 peak of 29th of February. That will turn focus again towards the upside. That was all for today. Our questions and answers part will follow after this session. I would like to thank you all for attending our live sessions. We are back tomorrow morning at the same time at 7:00 GMT, as we'll be already in one day of the Eurozone Summit. I hope that we'll have some more action in the market and more news to comment and share with you. I wish you a nice day and very successful trading, and hope to see you tomorrow again. Good luck.